because now it's about the second or fourth derivative, because now software, they're on the dance floor at the AI party. They're no longer waiting behind the velvet ropes. And now other tech players are trying to get in, cybersecurity, infrastructure. And I think that's, we're going to see a broadening out of this tech rally in terms of where we see this fourth industrial revolution.
Dan, how much of this is Trump related, meaning the Trump administration returning to the White House, versus that unrelenting strong earnings growth that we have seen? And then, of course, this fear of missing out momentum that certainly seems to be at least somewhat of a factor in these gains.
Look, Trump, it's a Goldilocks scenario for tech. Deregulation, con at the FTC, clearly that's in the last days here. So that's going to be bullish for deal making. I think some of the antitrust concerns are going to start to go away. I mean, they'll still be there in the background. But then you look at $2 trillion of AI CapEx in a deregulatory environment with $6 trillion on the sidelines. And I just continue to say, like, haters will continue to hate.
Accelerating adoption of AI. He predicts a tech bull market into 2025, fueled by enterprise investments in software, infrastructure, and cybersecurity, alongside a multiplier effect from spending on AI chips like Nvidia's. Ives emphasizes that AI's evolution is moving into advanced stages, with companies broadening their applications and infrastructure. He also highlights favorable regulatory conditions, such as deregulation and reduced antitrust fears, as enablers for massive AI capital expenditures. Companies like Palantir are positioned as key players, evolving into major enterprise solutions providers. Ives stresses the importance of diversifying AI investments, focusing on foundational sectors like cooling, power, and semiconductors, which underpin AI's growth and offer long-term value.
Your latest note caught our attention. You're very bullish into the end of the year. You're bullish, to say the least, going into 2025. What are the key drivers of that?
I think it's get the popcorn out, because when you look at the AI party, now it's about the second, third, fourth derivatives playing out. I think Salesforce was the key moment last night. Is, this AI party, it's 10 p.m. and it goes to 4 a.m. I think tech stocks are up over 20% next year as the bears continue to have trouble finding AI in their spreadsheets when they're hibernating in their caves.
I mean, what type of spend do we anticipate continues to make sense, and at what level for some of the early kind of dipping the toe in the water of everything from Agentforce and what that could mean for companies, all the way into, hey, how much data center space, how many more racks do we need just in order to make sure that we've got enough to run all the inference technology that's going to be necessary?
Yeah, I think you nailed it in terms of that question. Because look, I mean, to me, it's about the multiplier. For every dollar spent on an Nvidia chip, there's an $8 to $10 multiplier across tech, across software, infrastructure, cybersecurity. That's why this is going to be a tech bull market that rages into next year.
Dan Ives is highly optimistic about the growth of big tech stocks, driven by the acceleration.
So tell me about AIS. What kind of names will you be putting in there or not putting in there? What are some of the criteria?
Well, as we're in this early inning, the fund is going to be focused on those early build-outs. So we're talking about data centers and all the things that go into a data center. We're talking about the raw semiconductor manufacturing. So folks like Taiwan Semiconductor and Nvidia and Intel and AMD are certainly in this portfolio as well. But what we've done is compress the weights there. So we're also getting exposure to companies like Vertiv Holdings, which is primarily about cooling and power, which is a pretty unsexy part of the industry. But you know what? They're huge margins and they're collecting a lot of cash off the sidelines as people make those build outs. So in the beginning, this fund is going to look a little bit more build out and industrial based. As the super cycle evolves, you'll see it move more and more towards the applications and those endpoints where AI really is going to impact our lives.
And is it more US centric, more global footprint? What kind of exposure do we have in that sense?
It's absolutely a global portfolio. As you might expect, a lot of the companies are listed and trading here in the US, but there's exposure throughout Asia, throughout Europe, anywhere you see people building those things out. And again, while we focus on some of the higher tech and the flashier software names, a lot of these other companies, particularly around the world, are doing that pick and shovel work. And those really create more value opportunities. And by giving those a higher weight in the portfolio, you're doing more than just chasing headlines. You're really building a portfolio exposure.
I mean, you do have names like AMD, Micron, Taiwan Semi, as you mentioned, right? I mean, you do have the semiconductor exposure. You got to have that, right?
Absolutely. But the difference is we're not putting them in there at 15% of the portfolio, right? Most folks already have a fairly large exposure to companies like Nvidia. They don't necessarily need to be tripling down on that exposure when they're making a small AI play to maybe augment their core exposure. And that's really what we're talking about here, a satellite position. And if you're going to get that satellite position, you want things that are going to be a little different than what may already be in your portfolio. That's part of why the index methodology here, while it doesn't equal weight, it does compress those weights. So we have no companies in here that are 15 or 20% of the fund. We also don't have any companies that are, 0.1% of the fund and really not going to have any impact. So the idea is to create meaningful exposure to the real beneficiaries.
But more and more, you look at this AI spend, look at the use cases, obviously being led by the massive AI Palantir, can't deny it. And I think that's why this party is going to rage on going into next year.
As you're thinking about, and you mentioned Palantir, and I was looking at Palantir as we all were in our newsroom yesterday, just trying to figure out, okay, more government contracts, it makes sense. They've already leaned into that and seemed like there was a setup for that. As you're thinking about the way forward for some of the names that have been, dare I say, culty tech names, but now have real contracts to actually back some of the growth on that trajectory too, how are you kind of evaluating what that runway may look like?
Well, so when you talk about culty, I think some of it is retail essentially was ahead of institutional. I mean, you could say that for Tesla, you could say that for Palantir, you could say that for many names. I think the difference now is that the AI revolution is here. And the massive AI Palantir continue to be front and center. I mean, I think my question on Palantir, I think it's not about this stock going from a teenager to a senior citizen. It's about, could this be the next Oracle, the next SAP? I think that's really the question as we look out. And look, we've talked about in the show, the bears have missed every transformational tech name in the last 15 years, waiting for some black swan event, focus on their spreadsheet, and they can't see it in their DCF. That's how they'll miss this AI revolution as well.
Do you think it's the next Oracle?
I believe Palantir could be the next Oracle, and there's nothing that makes me believe it can't be, given where we see enterprise, given AIP, given its special sauce. I don't see anyone else that could compete. And that's our view. From evaluation, you have to look out 3, 4, 5 years. But to deny the AI revolution's happening, that's like being negative against Otani, LeBron, Djokovic. That's where I view Palantir in that category, being the massive AI.
The massive AI. Dan.
Time to spotlight AI and how you can get exposure to that group in your portfolio. Dave Nadig's with us, strategic advisor at Vista Shares. First of all, the AI revolution, is it real? What inning are we in? What would you say?
Well, yes, it's real, but we're probably in the first 2 or 3 innings. And I think this is something a lot of people get wrong when they look at big technology innovations like this. We see ChatGPT, we see these sort of flashy end states that look like the whole thing, but it's really not. We're very much in the early innings. And when we look at the ways investors can get access to this, honestly, what we see is a lot of leaning into the largest, flashiest, most volatile tech names like Nvidia. There's nothing wrong with owning Nvidia, but the actual build out that's happening in AI is much less flashy. It's data centers, it's cooling, it's people who run wires underneath floors. That kind of work is where the real money is actually being spent. So when we look at something like AIS, the product that we're talking about today, the point here is not to trade AI, but to get a meaningful economic exposure to AI in your portfolio if you think that's where the future is really headed. So the products that we're building at Vista Shares are really about building from the bottom up those folks in the economic food chain that are really going to benefit from this build out. So yes, it's very real, but it's going to happen a little bit slower than I think some people expect. And the early beneficiaries of all that spending are going to be a whole lot of companies that don't have the ticker NVDA.
Dan Ives highlights the transformative potential of the AI revolution, predicting a sustained tech bull market fueled by significant AI spending and favorable conditions like deregulation. He emphasizes that foundational sectors, such as semiconductors and data centers, will play a critical role alongside high-profile tech companies like Palantir in driving growth. To capitalize on this expansion, Ives advises investors to diversify beyond headline-grabbing names and focus on the broader AI ecosystem. This approach ensures meaningful and sustainable exposure to the industry's long-term growth potential. Do you prioritize investing in well-known tech giants or foundational infrastructure players in AI? How do you think regulatory changes will influence AI growth and innovation?